Hey everybody, Mike Tizzano with Fairway Independent Mortgage, NMLS ID 1015837. And I wanted to discuss a topic today that we've discussed in the past, and that is mortgage insurance. And there's a lot of negative information regarding mortgage insurance, and people have a negative idea of what it is for you. But really, if you think about mortgage insurance in this way, it allows you to finance your down payment. Because when a bank makes a loan to you, they are taking a risk. And the less money that you bring into a transaction, the greater the risk that they're taking. And no bank in the right mind would loan you enough money to purchase a house without being allowed to insure that risk if you're not putting 20% down. So what the mortgage insurance allows you to do is not have to wait until you can save 20% down. So I wanted to show you some real life numbers about the cost of mortgage insurance versus the cost of waiting. So right now, in the area I'm in Phoenix, the average rent for a 3-bedroom house, and this is probably conservative, is about $1,600. So for this example, I use 3 years as the time it would take you to save up a down payment for a home. So if you paid $1,600 a month for 36 months, you're going to pay $57,000 in rent, plus $57,600. Getting into that rental, you're going to have your first and last month's rent, and if you have pets and security deposits and things like that, your approximate out-of-pocket is going to be $4,000. Right now, the average home in the same area is about $280,000, and there's down payment assistance programs available. So I went back and looked at one of my previous buyers who used down payment assistance, and their mortgage insurance was $185 monthly. They used conventional financing, so around year 7, that is actually going to fall off their loan. Most people are going to refinance prior to this and get rid of their mortgage insurance anyway. But worst case scenario, at year 7, year 8, this is going to fall off. So they'll have paid $15,540 in mortgage insurance, far less than the $57,000 you pay in rent. Their cash to close using the down payment assistance can fall anywhere between $1,500 and about $6,000, depending on seller concessions and things like that. And then another thing to consider is the appreciation on the home. So while this person's waiting 3 years, they're missing out on 3 years of appreciation. I use 2%, which is very, very low compared to the appreciation that we've been seeing recently. And if it appreciated at 2%, your $280,000 house is $297,000 when you go to buy it in 3 years. So you see, you're going to lose out on $17,000 worth of equity, and you're going to pay about $40,000 more in rent. So mortgage insurance isn't a bad thing. It allows you to not have to wait for 20% down to purchase a home. If you have any questions regarding financing a house, please reach out to me. You can direct message me on social media, you can call, text, or email. All the info will be in the body of the post. Thanks, everybody.